What's going on, traders? Andrew O'Connell here with Pristine Capital. It is May 10th of 2022. We got our CPI data print out today, and we actually came in a little bit hotter than expected, team. Let's dive into the price action, and we'll take a look at all the ripple effects that are occurring in the market. Our box scores for today, we have the S&P 500 finishing down 1.59%. NASDAQ QQQ finished down 2.97%. Small caps were down 2.5%. Our dogs of the Dow Jones were down just 1.05%. And our ARK Innovation ETF in one single day was down 10.1%. Now here's what's pretty interesting about this action. So everything closed on the low end of the range, right? We had selling into the bell. Volatility barely changed though. So you can see our SPY, the VIX actually closed down 1.3%, oddly enough. Now take a look at our breadth. We had pretty much washout breadth. We had 25% advancers in the S&P 500. My trend model is still at a -3. So let's dive into today's data point. And from there, we can really set the stage. So take a look at this. This was our highly anticipated CPI data. Now keep in mind, I'm going to preface this with these economists that come up with the projections for these numbers every single month. They have undershot the inflation number every single time so far this year. So this is like their 5th time in a row where they undershoot the expectations. You would think that at this point they would take whatever their expectation is and maybe add 0.3 or 0.5 to it. Yeah, nonetheless, I digress. They undershot. So you can see our inflation data point year over year came in at 8.3%. The consensus was for 8.1%. Now what's interesting is that on a sequential basis, this is a slight slowdown. So you can see that right here. So you could make the case that inflation has peaked, but in terms of the estimates versus the reality, it was actually estimated to be a bit lower, and food inflation is actually still moving to new highs. So overall, did the market like that? No. And really what happened was today, they shot the generals, team. Look at this. Our Apple was down over 5%. Tesla down another cool 8.26%. You can see that there were certain areas of the market that were trying to hang in there, like healthcare, like energy, utilities. But yeah, those main stocks that everyone owns, those really got crushed. Sectors, take a look at this. Energy was up 1.34%. That was the big bright spot, which is not good. So this configuration that we've been seeing time and time again, where energy is ripping to the highs, and then you have, technology ripping to the lows, that is really bad for financial stability. Take a look at how hard some of these got hit. So in addition to ARKK, which we already talked about, blockchain assets were down big. We have the whole UST Luna debacle that's unfolding before our very eyes in the financial markets. And that's pretty much a big washout. So we're seeing across all these different asset classes, major stress. And when you start to see the stress and everyone's losing money and every portfolio manager is drawing down, that's where you start to see the dislocations, because investors are selling things because they have to, not necessarily because they want to. On our style factor sheet, you can see momentum was down 2.39%. High beta was down 3.05%. High div, low vol actually finished positive, up 0.19%. And I gotta say, with the earnings, and especially for ARK specifically, with how weak this market is, I've noticed when every company, if a company reports earnings, they beat and they raise, for the most part, they're either flat or they're trading slightly down. Then if a company misses or they guide lower, they're literally down 30 to 50%. Every single day I look at the post-market movers, there's at least one stock that's getting obliterated and down huge. So what I will say is that for something like this ARK Innovation ETF, it had a couple stocks in it. I was looking at it today, like Unity Software is in that fund. And Unity Software, I believe, was down. Let's see where this thing finished out actually. Unity finished out down 37%. As we exit earnings season, perhaps some of that pressure comes off some of these names, just because there's literally just less catalysts to sell things into. But that's really the state of the market that we're in right now. It's like, oh, a new data point came out, sell. Oh, this came out, sell. Like, it's just everyone's on the back foot, unfortunately. Let's take a look at our headline indices. The S&P 500 is approaching this VPOC over here at about 3,900. So I would not be surprised if we take that out in the overnight market or even during tomorrow's regular trading session. We're still below this downward trend line. We are getting really oversold away from this 20-day simple moving average. And take a look at where we are on the hourly chart. We are below our Venom R1 pivot. So yeah, we are definitely, we're oversold, but it's just tough to stage any sort of rally when every single day you're getting a negative catalyst. And if you look at almost every single financial crisis or, big drawdown in the market, if you just look at the chart, it always just looks like, oh yeah, the market went down and it kept going and going and going. But really the difference a lot of times between a crash-like event and an oversold market that bounces is you just continue to get the negative catalyst. And every time something comes along that could buoy the market, it just is an epic failure and another reason to sell stocks. NASDAQ, we also have a VPOC. We're approaching this one right here at around 11,800, somewhere right around there. And yeah, we're pretty much like, right on it at this point. So you might look at that level and say, hey, maybe here's where we could get a turn in that index. Russell 2000, this thing just looks horrible. And our Dow Jones, this thing is hanging on a little bit better, but still obviously pointing to the downside, still below all the key moving averages. So yeah, we just continue to see this carnage even in the crypto space. Like Bitcoin, look at the weekly chart, we're down at 28,815. And this is typically where we've been finding buyers stepping in. So granted, this weekly candle has not closed yet. But look, we're at 28,800. We need buyers to step in here. If they do not, then, a lot of people are pointing down. It's like, oh, maybe we could test 20,000 or 19,000. Is it possible? It could be. A lot of different asset groups are retesting their pre-COVID highs. So it could happen. Like for instance, I'm going to point out again to this ARK Innovation ETF. This thing, look at where it is in terms of its, look at this. It's literally trading almost to where it was, not the pre-coronavirus peak, during the coronavirus crash. So that's huge. And we know from the data point that we saw yesterday that a lot of these software companies, they are starting to get a little bit more attractive in terms of the valuations themselves. Like let's look, for instance, check this out here. Here's another one. This guy posts a lot of really good data points around the valuations for these tech companies. And look at this, after today's action, the median cloud software multiple is now at 5.6 times forward revenue. It's 50% below pre-COVID levels and 15% below the COVID lows. So I do think there's opportunities that are forming in some of the best companies in the world, but the market is just in such a big drawdown that you can really get eviscerated trying to buy in a bit too early. So yeah, heading into tomorrow, I'm really just expecting the unexpected. I did not trade anything today just because everything just seemed really shaky and really uncertain. But yeah, we are definitely in uncharted territory here. And if you're navigating these markets and you're doing a good job, you really have to pat yourself on the back because this is not an easy market to trade. That being said, that about does it for this market recap video. Hope you all have an awesome rest of your evening. And as always, I will see you all tomorrow.